Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 419 on March the 20th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on POET Technologies, TeraWulf Inc., Supermicro Computer Inc., and Navitas Semiconductor Corporation. And we discuss 4 new trades on Intuitive Machines Inc., W&T Offshore Inc., the iShares Ethereum Trust ETF, and the 2X Long VIX Futures ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. The markets experienced a 4th consecutive week of negative performance. In fact, the Dow is down 8% since February 20th, and the S&P 500 is down nearly 6%. This week, the Dow Jones Industrial Average lost 981 points, closing at 45,577 points. The S&P 500 index lost 125 points, ending the week at 6,506 points. And now it's time for the topic of the week. The topic of the week is heat maps. Tonight, I want to talk about heat maps. It will be hard to describe the visual tool, but I'll do my best. I use TradingView for my stock price charts. One of the many tools they offer in that software package is a heat map. You can create heat maps for stock, for cryptocurrency, and even for ETFs. The heat map is a bit of a visual screener for stock. It shows you a variety of data about the market in one image. It is typically organized by sector. Each company has a block which may be larger or smaller based on its market cap or any other factor that you're organizing by. The heat map also shows you which companies went up in price and which ones went down. It's simple, using green and red color palettes to tell you which names and sectors made money and which ones didn't. Sometimes I have an idea of a sector that is increasing in value, but I'm only familiar with a couple of companies in that sector. The heat map gives me a great way to find more companies in a sector. It also helps me discover companies that may be outperforming their peers in the sector. As far as visual tools go, it's a tough one to beat. The heat map helped me do quite a bit of research this week for the show as well in selecting trades. So I wanted to make sure that I mentioned it on the show to help you guys. I don't think I'd ever mentioned it before, but definitely take a look at heat maps. I find them very valuable, and hopefully you will too. Now let's get into the review of last week's trades. We're going to start off with the covered call on POET Technologies, symbol P as in Papa, O as in Oscar, E as in Echo, T as in Tango. At the time, the stock was trading for $6.81 per share. I looked at buying stock and selling the April 7 call at 70 cents, hoping for a return of 13.07% in 5 weeks. Well, shares of POET fell 87 cents, ending the week at $5.94 per share. The call option we sold lost 35 cents, leaving us with a net loss of 52 cents if we were to close the trade out early. Now, while the price drop was strong, certainly in percentage terms, I'm not totally convinced that POET has reversed its trend higher. It's been trending higher. That leads me to want to hold off before making any adjustments and possibly locking in a loss. Of course, we can always roll the strike lower, but that will change the economics of the trade immediately. We also have enough time left in this trade to wait a week or so to see if the price heads higher or is going to continue creeping lower. So I'm choosing patience over quick adjustments for most of the trades from last week. Certainly I am for this one. Next, we have the cash secured put. We looked at TeraWulf Inc., symbol W as in whiskey, U as in uniform, L as in Lima, F as in Foxtrot. At the time, the stock was trading for $14.66 per share. I looked at selling the April 14 put at $1.43. That could give us a return of 10.21% in 5 weeks. Well, shares of TeraWulf grew 46 cents, ending the week at $15.12 per share. The out-of-the-money put that we sold is even more out of the money. And with 4 weeks left until expiration and the stock moving in the direction we hoped, no adjustment on this trade is needed. This was our strongest, our most solid win from last week, the cash secured put. So that should give you an idea of what's to come. Next up, we're going to talk about that credit spread on Super Microcomputer Inc., symbol S as in Sierra, M as in Mike, C as in Charlie, I as in India. At the time, the stock was trading for $30.76 per share. I looked at selling the April 30/29 put spread at 36 cents. That could give us a maximum possible loss of 64 cents per spread. Well, shares of SMCI fell $10.20, ending the week at $20.56 per share. And when I see moves like this, it makes me happy once again that I am trading option spreads, not just naked options and not the stock itself either. Now, apparently, the market doesn't like it when your co-founder gets accused of smuggling AI chips by the DOJ, the Department of Justice. So the out-of-the-money put spread that we sold is deep in the money now. This shows you the power of a piece of negative news and how much it can affect your stock prices on the week. Now, the business case for the stock hasn't changed at all, so I would expect the stock to regain some strength in the coming weeks. That certainly is not a promise. That also doesn't mean it'll recover before expiration, which is what we care about because options have a timeline, a time limit attached to it. Most of the adjustments that I would make to this spread at this point would lead to an increase in total risk beyond the 64 cents that are at risk right now. So I plan to wait a week or two and see if we have a chance to reduce the risk in a more economic fashion. If this stock does start to creep higher, it will at least add value to the call spreads, which will allow us to create an iron condor. But of course, we'll see how it goes. I'm not expecting a full recovery of the $10.20 per share that it fell, but you never know. We have 4 weeks. I'm going to try and be patient before I lock in a loss on this one as well. And finally, we have our debit spread on Navitas Semiconductor Corporation, symbol N as in November, V as in Victor, T as in Tango, S as in Sierra. At the time, the stock was trading for $10.10 per share. I looked at buying the April 9/10 call spread for 64 cents. That could give us a maximum gain of 36 cents or a 56.25% return in 5 weeks. Well, shares of Navitas fell $1.32, ending the week at $8.78 per share. The in-the-money call spread that we bought is now out of the money. Now, my first inclination is to alter this trade. After all, we are 86 cents below the break-even point. We could sell the 9/11 call spread and turn this into a credit spread. That would recoup our loss on the week, and then we could turn around and sell a downside put spread to turn this into an iron condor. Now, my one reservation is that there are 4 weeks left until expiration. We have lots of time to adjust this trade. I also want to make sure that the stock is heading lower, not just retracing a slower trend higher. The stock price chart looks like it might be the latter rather than the former, so waiting a few more days and getting some more price information makes the most sense for me at this point, so I plan to wait. So that's it for the review of last week's trades. Today, March the 20th, was expiration for all monthly options in March. The new trades presented on today's show all use the April 17th expiration for monthly options in April. The trades on today's show are purely educational. I think there will be better prices and opportunities available on Monday when the new strikes are posted. So keep that in mind as we get started. We're going to start off with the covered call. I'm looking at Intuitive Machines Inc., symbol L as in Lima, U as in Uniform, N as in November, R as in Romeo. The stock ended the week at $17.84 per share. I'm looking at buying that stock and selling the April 18 call at $1.81, hoping for a return of 11.04% in 4 weeks. Now you enter this trade by buying stock for $17.84 per share and selling the April 18 call at $1.81. This trade makes the most money if stock prices finish above $18 per share. The break-even price on this trade is $16.03 per share. In real terms, the stock purchase will require $1,784 and you'll collect $181 for selling the option. Next, we have a cash secured put. I'm looking at W&T Offshore Inc., symbol W as in whiskey, T as in tango, I as in India. The stock ended the week at $3.11 per share. I'm looking at selling the April 3 put at 30 cents, hoping for a return of 10%. You enter this trade by selling the April 3 put at 30 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price on this trade is $2.70 per share, and in real terms, you would collect $30 for selling the put option, and you'll have $300 locked up just in case you need to purchase the stock. Next, we have a credit spread on the iShares Ethereum Trust ETF, symbol E as in Echo, T as in Tango, H as in Hotel, A as in Alpha. Stock ended the week at $16.10 per share. I'm looking at selling the April 16-15 put spread at 40 cents. That could give us a maximum possible loss of 60 cents per spread. Now you enter this trade by selling the April 16 put at $1.23 and concurrently buying the April 15 put for 83 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $16 per share. The break-even price on this trade is $15.60 per share. In real terms, you'll receive $40 per spread that you sell and have $60 at risk. And then our final trade on today's show is going to be a debit spread. I'm looking at the 2X Long VIX Futures ETF, symbol U as in uniform, V as in Victor, I as in India, X as in X-ray. Stock ended the week at $9.21 per share. I'm looking at buying the April 8-9 call spread for 50 cents. That could give us a maximum gain of 50 cents, or that's a 100% return on capital in 4 weeks. Now you enter this trade by buying the April 8 call for $2.50 and concurrently selling the April 9 call at $2. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $9 per share. The break-even price on this trade is $8.50 per share. In real terms, you'll pay $50 to enter the spread, and your maximum gain is $50 per spread. That's it for tonight's show. Thank you guys so much for listening. Thank you for adding me to your weekend. You guys are amazing. Thank you for the emails that I received. I am so behind in email because my head has been down working on a few new things for you guys that I mentioned in past shows, but haven't been ready to release just yet. So I didn't forget. If you didn't forget too, just know it's coming. And hey, I hope you have a wonderful weekend, a great week of trading, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.